fam, welcome back. So today we're going to be going over the Grayscale trusts and some recent news catalysts. So with that being said, let's get it. Okay, so I'm sure you guys can see here there is a lot of red today. Unfortunately, I mean the markets themselves, crypto is all kind of pulling back. So what the heck is going on? That's what you guys are probably wondering. Yeah, you can see it's not so obvious on the weekly time frame here what's going on, but if I go down to the daily time frame, you guys can see that the pullback here is actually kind of gnarly. So yeah, basically from this peak right here, we're looking like we're down at the maximum drawdown. It was roughly down 1.5, 1.6%. Again, that's on the S&P. As you guys know, the NASDAQ is more volatile, so chances are pretty good that things down even further. So what I want to go over here is the different news catalysts that we got today. I don't think it was the market so much pulling back on the news of jolts and all that kind of stuff. So job quits obviously came in less than prior, so that obviously that's always a good sign. I think that will probably remain relatively flat. It'll kind of fluctuate up and down. It'll be above and below expectations on opposing months or whatever. I don't think it's really going to the way that should play out. It's going to change much. Jolt's job openings. So this is the big one right here. Obviously, you guys can see it came in much greater than expected. Also much higher than the previous month. Again, this pretty much lines up with the soft landing narrative. I mean, look, the Fed is more concentrated on employment right now than they are on inflation. So, there's two sides to this story. A lot of people worry that if the economy grows too fast again, that it might resurge inflation. But if the economy slows down too fast, it might cause a recession. So all I have to say about this is that I think neither situation is going to happen. I think we are going to see the soft landing. I think inflation is pretty much dead at this point. It's under control. And so this is what we want to see on the flip side, okay, is we want to see job increases slowly increasing month over month throughout the entire nation. Now, in terms of the other important things here, so we have ISM manufacturing and employment. This came in a little bit lower than expected. So, I mean, that's not great. But again, I mean, it's been down here before. Okay, you can see in August it was pretty much at the same levels that it's currently at. Then it went back up, and it kind of just fluctuates all over the place. I mean, this thing was as low as a 46 back in March, and what did the markets do? They just simply went higher. So, I'm not really too concerned about this. I'm trying to see what the other thing was. So there was that and new orders. So this is the other thing that I think was pretty important. So yeah, it basically just talks about indicators measured for new orders, backlog of orders, new export orders, imports, production, supplier deliveries. I mean, we can go on and on about this, but usually, basically the gist of this is if a PMI reading is above 50%, then that means obviously it's bullish. If it's below 50%, it's bearish. I would say it being below 50% is not necessarily bearish. I mean, this thing has been below 50% for quite some time. And, the markets, generally speaking, have still gone up. So, and then again, the Fed is cutting rates. So this thing could easily reverse back to the upside in no time. So, in my opinion, I think the thing that's really kind of rocking the markets right now is this. Okay, so there is currently some kind of worker strike going on with longshoremen, kind of along I believe, the south and the east coast. So pretty much the gist of this is that, just to give you guys kind of a 10,000 foot view, so these are union workers. Okay, so they go on strike. If they don't get the deal that they want and they're not satisfied, they'll go on strike. As you guys can see, let's see if I can find the date here. Yeah, so it says October 1st up here. You guys can see that they were set to go on strike at roughly about midnight. So they have a 6-year contract with the United States Maritime Alliance that recently ended. And then, of course, it says that the port will remain closed until the strike ends. You guys got to understand this is the most important piece here. So what does this mean? Well, basically, it means that this can go one of two ways, okay? Either the unions or the companies that employ these people can give the unions and the employees what they want, which would be the best case scenario. Give them the raise that they're demanding for and protections from automation, as you guys can see down here. But the big concern is automation taking away jobs from those good paying blue collar jobs. So that would be the best case scenario. They give them what they want, and then the strike is very short lived. Worst case scenario, it causes basically like shipping of goods being imported into the country will slow down significantly and stop. And as time continues to go forward, this will be worse and worse and worse for the U.S. economy. So there's two things I have to say about this, okay? So number one, these companies, and I can't say this is a guarantee, but I'm pretty confident they are not just going to allow business not to come into the country because, again, it affects their profitability and it affects the country as a whole. And as you guys know, if there are increased layoffs, that basically equals a decrease in profit for the companies. So it is in these companies' best interest to actually give these people what they want so that productivity and profitability can continue for these companies. The second thing that I want to mention is I believe it was called the Suez Canal or something like that. So there was some supply shortage, supply constraint issues back in 2022 that happened. Those things eventually all got cleared up, okay? And we basically just ended up continuing business here in America and companies continuing to expand and produce profitability from that point. So do I think this is going to be a worst case scenario? Not really. I think this thing is going to roll over pretty fast. The companies are going to give these people what they want, and business is going to be conducted again as usual. Because again, I mean, you guys got to understand here, if they're doing 6-year contracts, that means that these companies won't have to have this conversation again with these people until 2030. So I don't think it's too much to worry about. I think the market's kind of overblowing this whole situation. All right, so let's get into the actual Grayscale trust here. Okay, so I'm going to say the same thing I said before. You can see the MACD's curling up. That's all bullish. Again, we are in October. Generally speaking, October should be a very bullish month, especially for crypto and Q4 as a whole. So roughly about 1150 to 15 at support here. That's kind of my buy area, 25 to 27 at resistance. 56 roughly at that swing high up there. So if I give you the maximum measured move here, you're looking at roughly about 340%. BCHG. I did read a stat that said that basically if the 1st of October was down more than 1%, that the rest of the month, I think it was in 100% of the cases, was actually up. So I'll have to pull that up for you guys later just to double check and make sure that's actually correct. But it is interesting, though, that after seeing that, all of a sudden, the first day of the month, that's supposed to be a bullish month, ends up pulling back, right? Okay, so BCHG, roughly about, I'd say about 550 to kind of that 650 area is a good buy zone. You have roughly about 1050 to 1270, 18 to about 20, and then 24 up there at the highs. So just giving you guys a quick measured move. Again, we already talked about these kind of red boxes up here. You can go back to the previous video to look at those if you need to. 266% gain. HSEN, so this thing has had a substantial pullback. Again, this thing is, if it's at the bottom of this green zone, in my mind, that's just another dip buying opportunity. So 350 to roughly about 415. And then you have 690 to about $8. And then that swing high up there is roughly about 10.5. So we're looking at about 125 to 193% gain. ETCG, so this thing does appear to have a bearish pattern. Whether it plays out or not, that remains to be seen. So candle low buying opportunity right now at roughly about 750. If it gets any lower than that, probably somewhere between, I'd say about $3 to, I'd say roughly about $3 to $6, somewhere in there. I don't think it goes any lower though. So the zones above head, 13 and a quarter to 16, and then 1770 to about 20. So just giving you guys the move here, 107% and roughly about 163% respectively. ETH, so this one has had a nice little double bottom, potential W pattern. There is a gap here that needs to be filled. Generally speaking, I think it's like 95% of the time gaps get filled. So it's pretty much almost a guarantee that these things are going to get filled. So the white line down here would kind of be my buy area. I'd be wanting to kind of stack on more when it gets closer to the zone, roughly about 1850. 2350 to 28 is going to be that resistance zone up there, and then the cup and handle target at $47. So 158% gain just to get back up to that target up there. GBAT, another small pullback here, but of course this thing traded in this area for weeks and weeks previously, either as resistance or support. So if you get another opportunity to buy down here and you can afford to do it and you think it's going to go up, may not be a bad time to get in. Not financial advice, but once these things lift off, a lot of people are going to be aping into these, FOMOing in, thinking they missed out on the rally. And if you bought down here, man, you'll be sitting on gold pretty much. Okay, so 440 to roughly about $5 at the support, 780 to, I'd say about 980 above head, and then 32 all the way up to the all-time highs. So roughly about 110% and 590% gain here. Phil G. So this thing is currently sitting on that support at 35 to 42. Again, it's pretty cheap at this point. I mean, the all-time high is at 400. The current price is at 43. I mean, it's nearly 90% off the previous all-time high. So that's a pretty good secondary dip buying opportunity before the actual bull run starts. 833% move. GLIV. So this thing, it's not really moving much. It looks like it's not moving much, but 4% is actually a lot. It's not a lot for crypto, but it's a lot. Like if you see a 4% drop in a stock, you're like, holy crap, dude, I got to get out right now. A lot of people think like that in stocks. They generally freak out when they see a dump like that. But, the boys here in crypto, we don't care about crap like that. 4%, who cares, whatever. Next. Okay, so 12% or 12 to 15 is going to be that buy zone, and then the 80 is going to be the all-time highs here. All right, so roughly about 525% on that one. G-Link, nice little rejection off the EMA's resistance. Technically speaking, that's not really all that much of a shock. So support down here, roughly about 38 to 45, 46, 66 to 85 at that resistance zone, which we're currently getting rejected off of by the bears, and then 220 at the all-time highs. So we're looking at roughly about 99 to 420%. GSOL, if you've patiently been waiting for an opportunity to buy Solana on the dip, this may be your opportunity. It doesn't mean it can't go lower, but it doesn't mean it can't go higher. It's, in my opinion, this thing has mostly just gone sideways. So it's kind of like Bitcoin, people buying kind of at these dips as the price of this thing comes down. They kind of want to buy along this bottom trend line. That's kind of how I would see that. So support zone here, roughly about 300 to 350. 580 is going to be that all-time high. If it does get a dip down into the screen box, which in my opinion, if it happens, it will be very short-lived, but I don't think it's actually going to happen. So 94% move here. If I actually go to Solana, and again, we only cover the altcoins once in a while, you can see kind of the same thing here. I mean, this thing is, it literally gives you a perfect setup to be able to buy the dips on these. I mean, if you're patient and you're willing to wait for the perfect dip buying opportunities, it literally tells you when they are. So like right here at 125, kind of in this area, 122, you can see the support zone here. and the EMA is all kind of lining up down here at 112, and then again kind of at 125. There's probably some whales loading up in this area waiting for this thing to rip. This is a bullish pattern, by the way. It's either a falling wedge, which is actually it's hard to line this one up perfectly, but it's either a falling wedge or a falling channel, which either way is bullish. So yeah, my guess is these whales are probably loading up right here with the expectation of making gains to the upside. Okay, so GXLM gave you guys the levels in the previous video of these 3 white lines here, but the current support is going to be roughly about 15, or basically anywhere between 15 to 20. So you got that resistance at 53 to roughly about 50. We'll just call that 59. And then 68, 69, somewhere in there is going to be that swing high at the top, 281%, and then roughly about 352% respectively. Okay, mana, this thing is kind of really just going sideways, but you can see the EMAs, MACD giving us early indication here. This thing might be about ready to rip. So 1050 is kind of that buy zone. Resistance here at 1760 to 20, and then the all-time high up there at 70. Personally, I'm pretty bullish on mana. I don't think mana is actually, the all-time high is actually going to be at 70. I think it's going to be much higher. Okay, 95%, and then roughly about 585. All right, Zcash, mostly sideways. Again, I see this as accumulation. Whales probably basically kind of buying in this area at these bottoms here, and then buying at this area at these bottoms here. If I were actually just to kind of measure this from the previous breakout, you can see from those bottoms there to that swing high was a 426% move. Again, if I were just to replicate this and say, okay, it's going to do another 462%, it puts us pretty much at the top of this previous resistance, which you guys can see was a swing high for the bear market back in 2022, but still a good gain nonetheless, more than a 4x. Okay, so support here could be anywhere from 325 going up to as high as 515. Resistance roughly about $8 to 950, and then the swing high up there at 10.25. So we're looking at as much as 212 and 240% respectively. All right, so that's it. Hope you all enjoyed the content. Please like, comment, and subscribe, and I'll see y'all later. Peace.